In this video, I'm going to show you guys exactly how you can trade the London Session Liquidity Sweep. Okay, I'm going to break it down step by step on the exact rule-based approach that you should be using when executing in the live markets. Okay, so just a little bit of context to this. I mean, what is the London Session Liquidity Sweep? Okay, it sounds quite complicated, but it actually is very, very simple. Okay, and basically, let's apply a indicator to our chart, which is trading. So if you go up to the top here, indicators, and the 5th one down called Trading Sessions Sonar Lab. Okay, so Trading Sessions hyphen Sonar Lab, made by Sonar Lab. Okay, and that will apply the sessions to your chart. Okay, so you can see here the London session is between 07:30 AM GMT up until 10 AM GMT. Okay, so the best way to picture this, guys, is within the London session there is going to be liquidity that is being built up based off the price action. So you can see ultimately that this London session has created a range. Okay, and this range is basically, there's liquidity resting above the high, there's liquidity resting below the low. It's as simple as that. Okay, so the London session creates a range. Ranges create liquidity above and below the extremes of the range. Okay, so let's mark on the low here, the London session low, which also corresponds to a fractal here. It's important that it's a fractal, and that indicates that it's a valid sort of area that we can target. It's a valid area of liquidity. Okay, one other thing that we need to add to the chart, if you don't already have it on your chart, is the 50, 100 and 200 moving average. That's by B Cryptological. Okay, apply that to your chart, add it to your favorites. But we only need the 100 and the 200 moving average. This is the 100 here, the blue one. This is the 200 here, the red one. Okay, when the blue one is above the red one, that indicates that we are in a buyer's market. Therefore, price is more likely to trend to the upside. It's as simple as that. And it's vice versa. So blue above red, you're looking for longs. Okay, red above blue, you're looking for shorts. Okay, in this example, we're looking for longs. This is also coupled by naked price action. So if you just zoom out and get a sort of macro perspective, you can see clearly this market is moving from bottom left to top right, which is also indicated by these indicators sloping to the upside. Okay, so price is moving from bottom left to top right. That's an indication, you know, that we're more likely to trend to the upside rather than, you know, take a trade counter trend. Okay, we want to follow the trend because that's where the easiest money is made. Don't get me wrong, trading is not easy at all. It's further from the truth. But what I mean is, you know, you're more likely to make profits if you're trading with the higher time frame trend, which in this example is clearly to the upside. Okay, so indicators are applied. Happy days. We've got our ranges here. We've marked on the London session low. You guys understand the premise of this video. So the London session liquidity sweep. So we're looking for buys, we're looking for longs. Therefore, we need to see a sweep of either one, our most recent fractal, or number two, which is an extreme liquidity sweep, which is essentially below the London session low here. Okay, so this corresponds to all sessions. However, in this example, it happens to tie up with our London session. Okay, so let's play price on. You can see now, let's get rid of this. Okay, so we're entering the New York session. Okay, 12 o'clock GMT. We're expecting volume to come into the market. That's when manipulation occurs. That's when the banks are starting to open. You know, companies are starting to trade. and that's when volume comes in. Simple as that. Okay, we've got this low here that we're looking for a liquidity sweep, right? So we want to see price run these lows, manipulate the retail traders. Obviously, we are retail as well, but the average person that's trapped in this market, their stop losses are below here. So most people know that this market's going to go long. Most people know that. Okay, however, we're using their stop losses as fuel below. Once we've seen the sweep, then we can look for a long trade. But we have to see a sweep of liquidity in order to enter a trade. Otherwise, because if you can't see the liquidity, you probably are the liquidity, right? So we need to see the liquidity being swept. If you can't see that, then you probably are the liquidity and you're probably going to get wrecked in the markets. So let's play this on. Okay, so we've swept the London session low here. Let's zoom in, make this very, very clear. Okay, so we've ran the low. Let's zoom in. Sorry to jump around, guys. We've swept this low. Price has breached below. We've had one candle breach, two candles. Okay, we have a maximum of a 3 candle rule, 3 candle liquidity sweep. So we've had two. We can set a limit order above this candle. So you've had a lower low, a lower low. We have a buy limit above the high of this candle. I'm going to take this back 1 second. I'm not sure if I mentioned, but this is XAU USD, also known as gold on the 15-minute time frame. Okay, I'm not sure if I mentioned that, guys. Okay, anyway, so we set a limit order above the high of that candle. Let's just move this up a little bit just for completeness. Stop loss goes below the low of the candle. Give it a little bit of room to breathe. A little bit of room to breathe. Okay, not too much, but just a little bit. Let's see if we're triggered in on the next candle. Okay, so we're triggered in. We are targeting a 1 to 3. You can target the highs, 1 to 4.4. We'll probably get there. However, 1 to 3 based on my data is a very, very logical place to be securing profits. You can also see we're going to be targeting, there's a fractal here. So, you need to be careful because if we hit a 1 to 3, price may actually run this liquidity here and then actually trend to the downside. Okay, so you need to be cautious of that. But as I said, it's more of a set and forget. You triggered in the trade, either we're stopped out or we hit our take profit at a 1 to 3. We've swept this London low liquidity, and therefore we are safe to engage and look for long trades in this market. We are within our New York session between 12 o'clock GMT up until 3:30 GMT. So let's play this trade on, guys. Okay. You can see literally within 45 minutes, this trade has hit take profit. Okay, don't get this wrong. This is not what happens on every single trade. However, sometimes this happens. There's trades that sometimes take 2 days, 3 days to play out. Occasionally, sometimes you get trades like this. 30 minutes, 45 minutes, you're in and out of the market. You've hit a 1 to 3 risk to reward, so you've gained 3 R on the trade. What that means is if you risk, for example, 1%, you would have gained 3% on this trade. If you risk 2%, of course, you would have been up 6%, 6R. Okay? And of course, you can tailor that to your own risk appetite or, your risk approach there. Okay? So this is the London session sweep. And this is, a session sweep in general. Gold loves to do this. Gold loves to trap people, get them on the wrong side of the market. You can understand here, people probably see this as like a breakout. You've got a 15-minute candle close below. People are probably expecting that to go to the downside. Okay? So you've got people getting stopped out because they think it's a breakout. You've got people who think it's going long. Their stop losses are below here. They're getting stopped out. Everybody's getting wrecked. And that's what we use as our fuel in order to execute in the market. And yeah, it's really that simple. Okay? The strategy itself is very simple. Trading itself is very, it's very tough, guys. I'm not going to sit here and say that trading is very easy. It takes a lot of work, a lot of hard work, dedication, a lot of testing, a lot of hours of your own time where you're not making any money. Okay, it may take a year, it may take 3 months. Everybody's different, but you know, people who sell the reality of trading being very, very simple, easy, it's just not the case, guys. Okay, but yeah, very, very nice trade, this one on gold here. 1 to 3 risk to reward. You're in and out the market. You then regroup, come back the next session, which will be the London session, and then looking to execute in the markets there. Okay, if you guys have got any comments, just drop them down below and I'll get back to you guys. But yeah, I hope you guys enjoyed this one. Very, very important concepts today. Just to summarize, this is the London session liquidity sweep. Okay, take care, guys. Bye bye. Bye bye.